Today is the big day. The Federal Reserve will cut rates for the very first time. But what will happen next? What will happen if they cut 25, 50, maybe 75, or they don't cut at all? So what does this all mean to you? That is what we're going to talk about in this video of WealthDom. My name is Norbert BM. I'm the portfolio manager and creator of WealthDom. So welcome, and let's just talk a bit about the Fed, and then we're going to go through the market, and then we're going to go into my predictions. So the Federal Reserve is nearing its first rate cut after an extended period of interest rate hikes. Many are wondering what impact it will have on the economy, because it's going to have some kind of impact, the markets and the everyday life of each and every citizen. Also, whatever happens in the US will affect the rest of the globe. So this is a very important rate cut. So will they cut 25? Will they cut 50? Will they cut 75? This is what we're going to talk about today. But first, let's just take a quick look at the markets. Let's take, as always, a look at today's market events. So we already had the balance trade from Japan. We had the inflation rates are going to come out soon from the UK. We're going to have, first of all, the building permits in the US, and then we're going to have the Federal Reserve's decision on cutting rates or not. And they're also going to have their conference. Now, not only if they cut rates will be important, but also their guidance and what they're going to do in the upcoming sessions, of course. Let's also take a look at the week ahead. Today is Wednesday. Tomorrow, on Thursday, we're going to have the interest rate cuts from the UK. And on Friday, the BOJ interest rate decision and also the inflation rate from the Bank of Japan. And then we're also going to have retail sales from the UK. Now, looking back on yesterday, we had the S&P, as I said, take care of these upcoming days. The S&P closed positively, but only with 0.03%, so 3 basis points. Then the Nasdaq also barely made it with 5 basis points, and the Dow Jones closed negatively with 4 basis points. So you can see the fear in the markets. Although the day started, as you can see here, extremely powerful. Bitcoin rose, everything rose, and then it started throttling, and it went almost in the negative. Now, commodities are looking okay-ish. They are in the negative. They are fluttering. They're also waiting for the rate decision. Also, the US dollar is... So let's just talk about a bit about history. At the very first cut, the US dollar will strengthen, but after that, it will weaken historically. Now, Bitcoin, as I said, had yesterday a very good day. Today is opening a bit lower. It's traded 24/7. So depending on what everybody thinks, if they cut 50 points, this is going to explode. Maybe. Who knows? Okay, and then on today's earnings, we're watching for General Mills. This is an important company. We're going to see what their guidance is for the future. Is very important for the consumer. So look at General Mills' earnings and also their earnings call. It's a really important one. They're also going to post exactly at the opening bell. So let's do this. My predictions. There are 4 scenarios. Scenario number 1, Fed cuts 25 basis points. So the prediction here is that at 25 basis points, rate cut could be the most conservative move. This signals not only that the Fed is up to ease economic pressure without sending a message, of economic trouble. So potential impact, stock markets. Likely a mildly positive reaction, as the markets may see this as a cautious approach to support growth without creating inflation risk. Housing markets will see this as a lower mortgage rate boost, but remember, low mortgage rate boost to home sales rising then slightly. Then on the inflation side, we're going to see almost nothing, a little immediate impact on inflation throughout the year. It could be, or through the next year, it could have some kind of effect, but not in the short term. Now, consumer spending, some relief for the consumer could be expected for this, but also mild release. And on the risk perspective, a small cut might not provide enough stimulus for the markets to kickstart the strong growth of the economy. Scenario number 2, or prediction number 2. 50 basis point cuts. Now, this could be a strong signal that the Fed is committed to support the economy, but especially through growth stalls or inflation falls sharply. So this is really data dependent. Also, the first one, I believe that the 25 basis point cut is the most likely one. The 50 basis point cuts is the least or less likely one. Now, what kind of effects could this have? So we're going to see this is speculation, remember, we could see stock market likely be on a strong positive reaction at the beginning, and then on Friday it could dump again, as investors could see this or interpret this as a clear sign that the Federal Reserve is ready to provide significant support for the markets. Now, a lower mortgage rate could support notable increases in home buying, helping the real estate sector. On the inflation side, we could see a rise in inflation over the time of this economic year. On a consumer perspective, more noticeable relief for consumers, leading to a boost in retail discretionary spending. So expect more earnings from Walmart, from Costco, from so far and so on. Now, key risk factor here, inflation may start to pick up again, especially if the economy does not slow down as expected. First scenario. The first scenario will be 5 basis point cuts. Less likely, but I just take it into consideration. So a 75 basis point cut could be a bold move and likely signal that the Fed is deeply concerned about the economic slowdown or deflationary risks. Now, we don't see deflationary risks, but we do see consumer slowdown. So depending on how the Fed interprets the data that they're going to receive, especially also for home building permits, this could impact them. Now, potential impact. So 75 basis point cuts. Remember this, a likely strong surge to the stock price, as this could be seen as a significant boost to the liquidity and growth. Housing market expect a surge in demand for housing as mortgage rates could drop substantially. On the inflation side, a sharp cut could reignite inflation concerns if the economy does not contract significantly. Consumer spending, significant relief for borrowers, likely leading to a surge in spending, could also lead to increased borrowing, although. And the key risk factor is such a large cut could be seen as a panic move, shaking confidence in the economy stability. Now let's go to the very last one. So what happens if they don't cut? Less likely, so the least likely scenario. Now, if they do not cut, again, these are predictions, the Fed could decide to hold interest rates steady if they believe inflation risks are still too high. But they did say that they don't believe that. But let's just imagine. Let's just imagine this as a next step. So stock markets could experience a sharp decline as markets are currently expecting a cut. So remember, markets do not expect a no-cut scenario. They expect a 25 to 50% cut scenario. So they expect a cut. Now, housing market, mortgage rates will remain high and likely dampening home sales and price growth. On the inflation side, no cut will keep inflation pressures in check, but could also risk pushing the economy into closer recession, which would be great, not great, but a little pain and then it will be over. Now, the risk here, also the consumer with higher borrowing costs would continue to weigh on consumer spending. The higher borrowing costs will continue to weigh on consumer spending, especially on big ticket items like homes and cars. Now, let's think about this in the following way. The risk here is that the Fed will slow down the economy too much and increase the chances of a recession by not cutting those rates when the economic growth is already flatter. So, in conclusion, the Federal Reserve upcoming decision will have a significant impact for the economy and the financial markets and for everyday consumers like you and I. Whatever the Federal Reserve will decide, 25 basis points, 50 basis points, 75 basis points, or no cuts. Alternatively, if they choose not to cut at all, the outcome will influence everything from stock prices to housing to inflation. Should pay a close attention to today's decision. also to the guidance. So stay tuned for more updates and expect predictions as we approach the Federal Reserve cut. This is a big day, a big decision. What do you think about this? So how do you think this will impact you? Leave this in the comment section below. Also, leave your predictions. Come on, 25, 50, 75, no cut. Leave them in the comment section below. With this being said, I'm Norbert BM. Don't forget to like, share, and subscribe. Click that notification bell in order to get notified whenever we post new videos like this. We're posting from Monday to Friday, and then on Saturday, we have a portfolio review with what we bought and what we sold in our stock portfolio. So stay safe out there. Catch you next time. Bye-bye.